Okay. I think we can begin. Oh, sorry. Start. Okay. Good afternoon, everyone, for being here, or good morning from wherever you are joining us. Welcome to this side event of the Africa-Europe Week, hosted by the UN Capital Development Fund. I am Mali Kambandu, and I will be your host today. I'm a knowledge management analyst at UNCDF for the Inclusive Digital Economies team, supporting Zambia and Malawi. Thank you for joining us this afternoon. We received over 250 registrations for this event. There are participants from the private and public sectors, international development agencies, and various other sectors. Today's agenda is composed of 3 sections. First, we will have opening remarks, then an interactive panel discussion among our distinguished guests, followed by time for your questions. For that, please type your questions in the Q&A function on the platform. My colleague Naomi de Groot and I will collate the questions and will pose them to the panelists during that Q&A session. Also, please note that this session is being recorded and will be shared with colleagues and attendees at the end to give others who weren't able to join us today a chance to hear about this new approach to development finance. I'd like to introduce our panel today. We are joined by Ms. Priti Sinha, Executive Secretary of UNCDF. Ms. Sinha is an investment and development banker with over 30 years global experience, including serving as CEO and President of FDD, Financing for Development. Good morning, Ms. Sinha.
Hello, Molly. Nice to be here.
Thank you. Also on our panel is Mr. Erik Korsgren from the Swedish International Development Cooperation Agency, SIDA, where he is the head of guarantees and catalytic financing. Good afternoon, Mr. Korsgren.
Good afternoon. Pleasure to be here for this important discussion.
Thank you so much. We also have on our panel Mr. Frank Ajaba, Director of Business Development for the African Guarantee Fund. He has over 20 years experience with business development, innovation, and new product development. Good afternoon, Mr. Ajaba.
Good afternoon, Mali. Good afternoon, everybody. Nice to be here.
Thank you. Also on our panel is Ms. Liliane Ndabaneze Chabuka from Wide Energy Africa, which she founded in 2016 as a business to empower women and also to contribute to sustainable energy efforts in Zambia and the continent at large. Good afternoon, Ms. Ndabaneze. And
good afternoon to you, sorry.
Thank you. Also on our panel this afternoon is Ms. Yorit Olivier from Standard Bank Group. There she is the head of enterprise, direct business and propositioning, overseeing 14 African markets. Good afternoon, Ms. Olivier, and thank you for being here.
Thank you. It's an absolute pleasure to be here with all of you today, and I look forward to the discussions. Thank you.
Great. Many thanks to you all for being here this afternoon. To begin our conversation, I would like to ask Ms. Priti Sinha from UNCDF about the work that UNCDF is doing in stepping up its guarantees in LDCs, particularly here in Africa. Please, may you tell us why your focus on guarantees is important for Africa's continued development?
Well, good morning, good afternoon to all, and good evening to some. Mali, thank you so much for that introduction. Maybe before I start my comments in response to your question, I'd like to welcome everyone. and to make sure that the panel looks into all the issues that we talk about. And we are extremely fortunate to have such an esteemed panel today. We think the topic of guarantees to finance development in Africa is of extreme importance. And to all the representatives here, let me personally thank you for all your critical efforts to make the capital work for humanity and not the other way around. Let me extend a particular thanks to SIDA, one of UNCDF's most essential partners. And we're very proud that UNCDF and SIDA and all the other partners are sitting on this panel together as we discuss our collaboration around our guarantee facility in Zambia. Just a quick word on UNCDF. We aspire to be the UN's flagship catalytic agency for financing the LDCs, the least developed countries. Alongside our partners, alongside SIDA, we have jointly created the Loan Portfolio Guarantee Facility to share the risk with the financial institutions financing MSMEs. We believe the Loan Guarantee Facility will serve as a critical tool in reducing poverty in Zambia, as it will focus to allow access to finance and to further liquidity and investments to meet the needs of the MSMEs. So with that, Marley, let me now step into the question that I'd like to answer on why guarantees are so important for Africa's development, continuing development. So let's start with a simple problem statement that we are aware of. There's simply not enough ODA to finance the achievement of the SDG agenda. Grant financing is likely to cover no more than 10% of the investment capital needed to achieve the SDGs. Even with annual infrastructure spending of over $1 trillion in developing countries right now, annual spending would have to be 2x or 3 times that to finance the SDGs. Let's focus a little bit on the small business sector in Africa. The World Bank has calculated that the formal MSME finance gap in sub-Saharan Africa is over 300 billion. That reflects a critical challenge. In addition to the infrastructure financing needed, we think the immediate need for SDG financing is at least 200 billion. So we're talking big figures here. Now let's take a look at Zambia's market, where the MSMEs represent 70% of GDP, 88% of employment, and contribute 97% of all businesses in the economy. But despite this importance, these firms are constrained in their ability to access capital, particularly as the country's financial institutions remain wary of lending to them. And this is due to a wide variety of factors. For example, financial institutions may not have the internal processes, tools, and approaches to assess and deliver products and services to MSMEs, as well as their own reliance on short-term liquidity sources that prevent them from meeting the long-term financing and investment needs of MSMEs. On the MSME side, there is a need to provide sufficient and acceptable collateral to access the credit. So clearly, we have to lever all access to finance that we can come up together as partners here to achieve the SDG agenda. We need to exhaust all those levers. And that includes leveraging guarantees given their proven capabilities and capacity to mobilize additional capital and crowd in investors. Guarantees are a necessary tool for financial risk mitigation of private sector operations. Risks that can be related to commercial banks lending to smaller enterprises, risks inherent in financing of large private investments, for example, in infrastructure, and risks inherent in the research and innovation undertaken by private companies and so on. And thanks to the eligible criteria normally implemented in the guarantee agreement, guarantees can be a proven way to channel finance towards the SDG-related goals, towards the relevant guarantee beneficiaries, and consequently towards a global economic growth, which is inclusive of the LDCs. These are the reasons why we created the Loan Guarantee Portfolio Facility in Zambia, which I mentioned earlier. We expect the loan guarantee facilities to provide over $600,000 to MSMEs, a majority of which will be owned by youth, women, and persons with disability. And a key aspect of this intervention is also the technical assistance that we will provide to about 500 MSMEs, which would help them improve business processes and chances of success. So as UNCDF, we really believe in the guarantee instrument we have positioned ourselves to implement such programs along with our partners here due to perhaps our local presence, our market knowledge, and our focus on MSME financing expertise. And we want to help assess and implement relevant eligibility criteria, including the duration of the underlying loans, and to promote the uptake of guarantees for the MSMEs, certainly in the priority sectors in the local economies. So perhaps with that, Marley, those opening comments, I can hand it back to you.
Thank you so much, Ms. Sina, for framing why the loan guarantee facility is within UNCDF strategic direction. I think that gives us much more context. I'd now like to turn to a cooperating partner, SIDA. UNCDF has a strong and growing partnership with SIDA, where in Zambia, in 2020, we launched phase 1 of a partnership to address access and usage of credit facilities, including guarantees for digitally enabled MSMEs. Mr. Korgsgren, can you please tell us how SIDA uses guarantees to direct capital to least developing countries? And may you also give an overview of how does your partnership with UNCDF in Zambia fit into that strategy?
Thank you, Marley, and thank you for the great introduction to the thinking behind guarantees, as Preti just gave us. First, maybe I should start with just saying a few words about SIDA. SIDA is the Swedish International Development Cooperation Agency, and we are responsible for implementing all bilateral, regional, and global development cooperation programs that Sweden is financing. You may know that Sweden allocates 1% of GDP for development cooperation, and the guarantee program that we shall talk about today is actually on top of that 1% allocation. So it increases our possibilities to contribute to a fair global development. SIDA is committed to the financing for development agenda, including, of course, to mobilize additional resources beyond ODA for development purposes. And we have developed a guarantee program, which we think is a very strong instrument through risk sharing, mobilize additional private investments for sustainable development. As Preti explained so well, the thinking behind the guarantee, but in short, a guarantee is an insurance-like instrument where we can guarantee part of a lender's losses against a fee, and that fee shall cover the expected loss that SIDA may have through the operations. That fee can, if necessary, be subsidized by SIDA, and we do that. We subsidize the fees in especially more risky interventions, because otherwise the fee may be too high to be possible for our partners. Also, very important, we strive at, when possible, complement our guarantees with technical assistance and projects to strengthen the capacity of both lenders and borrowers, and to contribute to a business and investment-friendly environment. The great majority of our guarantees are portfolio guarantees, where we guarantee a bank's lending to a certain market segment or a certain target group. The market could be renewable energy or health, and target groups could, for instance, be women-led SMEs. All these guarantees are implemented as part of SIDA's bilateral support to different countries, mainly in Africa, but also in other continents. And when we start a discussion about an intervention, we always want to start the discussion in the development challenge that we want to, that should be solved. So that is the first question, well, the first analysis. And only when we have identified the development channels, we decide which instrument that is most suitable for that purpose. And often a guarantee can be a very cost-efficient method to contribute to sustainable development. If I zoom in then on Zambia, SIDA has in the past implemented 2 guarantees in Zambia, one through Madison Finance Company that was in the renewable energy sector, and one through Sanako Bank to support SMEs in the agriculture value chains. Both those guarantees have expired. One of them was only partially successful because it suffered from low utilization. Regarding the intervention that we are now planning to implement together with UNCDF, I don't have to say much more about the purpose of it because that is already explained. But we want to, through this intervention, enable small and medium-sized companies to get access to finance from banks in Zambia. And that will allow the companies to invest in their business, hire more people, provide products and services, and in the long run, contribute to growth and poverty reduction. And we hope that this guarantee, combined with technical assistance, will be a small but important contribution to transforming the financial landscape for SME in Zambia. You asked also about how we see the partnership with the UNCDF, and let me say from start that we see UNCDF as a strategic partner. UNCDF has taken the lead in working with blended finance in LDCs, and that is also a SIDA priority. We, and considering UNCDF's local presence and knowledge of Zambia and other African markets, we see UNCDF as a very interesting partner, and we foresee a partnership that goes beyond this support in Zambia.
Thank you so much, Mr. Korsgren. I think you touched on a lot, and central to that obviously was your mention of SMEs, which many would consider Africa's engine for growth. And I'd like to now just switch over to somebody who has SME experience, Ms. Lilian Nabaneze, who is the co-founder of Wide Energy Africa. Would you please just share with us a little bit of your experience and the difficulties that you've had finding financing, adequate financing for your business? And do you think how do you think credit guarantees can help increase those financing flows? Although I know that a few minutes ago, Mr. Korsgren alluded to that a little bit.
Thanks, Mila. Thanks, everyone. I'm glad to hear Ms. Sina and Mr. Korsgren's remarks, which really sound like a light at the end of the tunnel, if you want. As Mila introduced me, my name is Lilian. We started Wide Energy in 2016. As a small business, it grew in 2018 when we started the solar home system business, which is on a pay-as-you-go model. As you know, it's a capital-intensive business, which we started merely on a small capital, basically from family, friends, and fools, as they say. Growing the business was a challenge, and you need capital to order your stock on cash, and we sell it in kwacha, and we sell it on a long term where customers pay over 24 months. You definitely need some support. You definitely need a loan from the bank, and we've had our challenges. We've had our experience where you cannot get a loan because there's no guarantee, because the interest rates are up high, more often up in the 30s as here in Zambia. And you need a collateral. You do not have a collateral. You are trying to build a business. And those are some of the challenges. Interesting to understand that this loan guarantee facility will basically come to help such SMEs who are trying to build a business. And also, what you ask about how would the guarantees help such businesses? Obviously and immediately it will impact on your cash flow. It will impact on, it will strengthen our value proposition. It will help us build our business processes, especially with the mention of technical assistance that helps the business to strengthen our value proposition and be able to attract investors. Maybe lastly, or before I finish, I would also say that you get into a market as a local business where you are competing with external funded companies that are able to get these loans on a much lower single-digit interest rates. As a company that gets it at a higher interest, you tend to shift that cost to the last mile customer. In our case, our customers are basically 90% farmers that in the first place cannot afford that. We are trying to introduce renewable energy, renewable product to 90% of your customers, and it loses the purpose of what we're trying to achieve, growing the economy, impacting their lives, their education, and so forth.
Great. Thank you. I think you've really painted a very first-hand picture of what SMEs really face regarding local financing. If I can now turn to the African Guarantee Fund, which has been implementing across the continent for 10 years or so. Mr. Ajaba, what trends have you noticed in the years that you've been deploying guarantees? And in addition, are there certain target groups or segments where guarantees appear to have the greatest positive effect? For instance, young people, women, farmers, or anything like that?
Thank you, Naomi. Sorry, thank you, Mali. First and foremost, I would like to congratulate UNCDF and SIDA, who is also African Guarantee Fund partner, to start this powerful initiative in Zambia in order to unlock more finance to SMEs in this country. So far, African Guarantee Fund share the same mission, like the same objective, like UNCDF and SIDA, which is to promote economic development, increase employment, reduce poverty, okay, by providing partial financial guarantee to financial institutions so that they can on-lend easily to SMEs who are the backbone of our economy and who create jobs. So two quick figures. So far, African Guarantee Fund has its footprint in 40 countries in Africa. We are able to help 23,000 SMEs to access to finance, and we partner with 168 PFI, partner financial institutions across this country, and ultimately we are rated AA- since many years. Well, that is a proof that what we are doing it at the best standards, international standards. So what lessons have we learned while doing this since 10 years now? We learned that guarantees definitely play an important role in helping SMEs to access to finance. You know, even when you are an entrepreneur, even a corporate or a large local entrepreneur, there is a risk. Now, when you are an SME, the risk is even higher, and without a guarantee, most of the financial institutions of the investors are not willing to support the SME. So the guarantee, the risk sharing scheme help the bank to on-lend to more SME. So far, we realized that due to our guarantee, we help SMEs to raise funds, but more importantly, talking about SDD, we help banks due to our green guarantee facilities, okay, to start supporting, contributing to the energy transformation of our continent by supporting more and more SMEs that are in green business. We also we are also trying to push and to support bank to do more with women-led business, because we are managing the affirmative finance action for women, the fund, the guarantee portion, and this also is helping more and more women to access to finance. So I have two key, how can I say, it's not recommendation maybe, to give to UNCDF and SIDA in the structuring of the fund that you are building in Zambia. I think depending on your risk appetite, the capital structuring of the fund must be really well balanced between the different classes of shareholders. I have understood that you will go to MSMEs, means more risk. So I guess that on your capital, you have people who want to take more risk, okay, less return, more risk. And this is critical. This is what will really help you to reach the inclusion objective that you want to meet with this guarantee fund. So to wrap up, definitely the guarantee has a huge impact on the SME accessing to finance, huge impact. It helps banks to grow the portfolio, the SME portfolio. It helps banks to explore new area like green financing and women-led business. And AGF also provides capacity development at the bank level and also at the SMEs level, because we use our capacity development tools as risk mitigants, okay, to help the bank to improve his policies, his processes, and also to help the SMEs, like Lilian was rightly saying, to help the SMEs to get ready, okay, to attract investment or to get ready to attract more investment. So I will pause here and open to answer to your question. Over to you, Mali.
Thank you so much, Mr. Ajaba. It's great that you are already in a situation where you can make a couple recommendations to our colleagues here. And just now heading over to Standard Bank, when we speak about guarantees and lending, we mostly speak about facilitating loans from financial institutions to private sector enterprises. Ms. Olivier, what challenges does a bank such as yours face when lending to SMEs in Africa? And how might guarantees such as those that will be potentially explored in this new partnership help to alleviate those concerns?
Thank you very much, Molly. And thank you very much for the great introduction. And to my fellow panelists, thank you for your insights. And I think I'm really glad to see an alignment on the vision from UNCDF, from SIDA, from ourselves as a bank, that we all want to support, and provide this funding and growth to the SMEs in Africa. So if I can just maybe position as a bank, when we look at the SMEs, we look at them in 4 categories. So the first one is survivors, the growth survivors, the aspirers, and then the rapid risers. So normally the survivors and the growth survivors are completely underbanked. And they find it extremely difficult, as we heard earlier, to get that access to finance and funding to start and grow their business into that sustainable business. So they get left behind most often. And as a bank, we really try to create models to financially and economically include them so that they're not left behind. So when we look at the aspirers and the rapid risers, these SMEs are already then in progress of transforming their businesses into that registered and sustainable business. And they, of course, operate in multiple sectors. So to your question, the challenge for us as a bank is, how do we solve for this? Seeing that, as we heard from the client, is that they very much no collateral, very limited collateral, multi-banked, and very inconsistent income. So traditionally, as a bank, it's difficult for us to lend immediately. But we have started building models and scorecards on using behavioral data points in a value chain. So when we look at the entire value chain where the SME is operating in, we solve for that. And we introduce SMEs into a value chain depending on the sector. So if it's agri value chain, we try to introduce a MSME into that ecosystem. And then that is also for us a way to de-risk the defaulting. So the question for us is always, how do we support these SMEs to graduate their businesses to that next level and next level? And I think in itself, these investments and guarantees will definitely help de-risk those. So your second question about how these type of partnerships and guarantees might solve for it. So when we look at the guarantees developed, we must take, as I mentioned, the entire ecosystem as a whole into consideration. So these SMEs want to buy more to sell more. Some of them might need short-term working capital, some might need stock loans or working capital. And then the larger enterprises that we look after might need that capital investment. It will be, these different types of risk profiles that will then inform our structures and frameworks to the guarantees that will be suitable for that value chain, whether it's the early financing stage, lines of credit, or whatever that is. So guarantees for us as a bank have several characteristics that bring that advantages to the current traditional and the innovative lending operations of us as a bank.
Okay. So thank you so much, Ms. Olivier. So would you expect to see that continue in a new sort of guarantee program such as this? Or would there be some changes that you would be interested in seeing in a new program?
Yes, so I think, as we heard, SMEs are the driving force of the economy, employment creation, driving the GDP. So I think as Standard Bank, we want to achieve our purpose. Our purpose is to drive Africans' growth. And while we make a substantial impact on the society, so if programs as this is directed to very specific and strategic focus sectors in our economy and supported then not only the funding bit, and I'm very glad that we heard about that capacity building programs, because as a bank, we're very interested, not just that funding component, but also that financial literacy. How do we build business mentorship, networking? And in Standard Bank, we actually soon will be launching a mentoring program, and it will be great to combine these, as part of the program with a bank, for instance. So if we combine the fund and the capacity build, that will absolutely for us drive that ecosystem and economic growth. It will for us also de-risk the financial part. And then, of course, that will translate into that job creation, uplifting local communities, and just positively contribute to those environmental goals. So for us, the meaningful value co-creation is very critical. So to co-create programs when developing these guarantee programs as well with us as a bank, so that we ensure the risk, the lending, the economic scorecards are clearly measured. How do we measure that success that's got a real impact on these businesses? So I think it will be great to just start unpacking those.
Thank you so much for that insight. I appreciate that. I'd like to now open up the discussion to all of our panelists, as I believe there are specific questions or perspectives that you all would like to gain from each other or from one another. Perhaps Mr. Corkscrew, would you like to begin, or I can throw it to someone else if not?
I'm happy to begin. Thank you very much. I think I want to ask Jorette a question, follow up on what you just talked about. I found that intriguing and interesting, the classification that you make, and I'm thinking about, do you have ideas how we as a development cooperation provider perhaps could be more granular and find solutions that fits better into the different categories? And then I'm thinking not only about guarantees as a risk-sharing instrument. There could be other ways of sharing risk or stimulating loans apart from guarantees and technical assistance. Any ideas about that? I'm eager to know.
Yeah, no, absolutely. I think there's a lot of opportunities, because with us working with the SMEs on the ground as well, how we approach it, and I'm going to give you an example in Nigeria, but how we approach it, we very much focus on a sector and we build clear value propositions for the entire value chain. So from the bottom to the top, corporate environments. But I think for us, it would be the right approach when we talk about growth to look at the sectors, because when we focus on a sector and solve for it, it will de-risk that sector, that value chain in the sector. So I wanted to give you one example of NERSAL. It's a credit risk guarantee. It's in the agriculture sector, right? So they, and it's in Nigeria. So they have been provided the credit guarantee across the entire agri value chain. So that it will start with fertilizer schemes, large-scale primary producers, smallholders, cooperatives, agro-dealers, all the way up to the farm. So when it's just a guarantee provided from a funding perspective, it's good. But when we start creating that capacity build, that is better, because now we are building those SMEs. We are building them into sustainable businesses. So it will create the de-risking, again, as I mentioned earlier. So when we look at what was a benefit that that specific scheme brought to the table, it was to provide that or bridge that gap of 120% collateral that these SMEs and in the value chain had to put down. So that was one. The second one was they were now able to meet the higher requests from off-takers. So the distribution network became bigger. Thirdly, they were able to start building that new business revenue streams for their own businesses and improve their current revenue streams. So at the end, it is really for us as a bank to look at the value chain and solve for the value chain. And as you open it up, the more opportunities for, become relevant for us to solve for. And I think that creates that value for us, the real value that we can bring to the SMEs.
Thank you very much. Mali, is there time for one more question from my side?
Yes, please go ahead.
Yeah. And I actually would like to ask Frank a question. Since we are both guarantors, SIDA and AGF, One thing that we quite often see is that in spite of good partnerships with banks and other, or financial institutions, and a generous guarantee scheme, there is a low utilization. The lenders is not able, or for any reason do not utilize the guarantee amount that has been provided. And I mentioned that we saw that, for instance, actually in one of our interventions in Zambia earlier. I wonder, Frank, from your perspective, do you have any such experiences? And if you have that, have you any suggestions how to prevent that such underutilization happens?
Thank you, Eric. And you're right. The utilization, one thing is to sign the guarantee, the portfolio line. Another thing is to use it. There are many reasons, but you're right that the utilization rates, we can improve the utilization rate. So the first reason is also due to the fact that most of the financial institutions, they don't, how can I say, they take the risk that they are only comfortable with. They don't take a risk because they have guarantee. They take a risk because they they did the assessment, they are comfortable with the transaction, and they put the transaction under the guarantor coverage, maybe to free up their core capital or to grow their portfolio. Now, what we realize is that when we talk about low utilization rates, it's important here to point out two things. By giving example, when you give to a bank a 10 million guarantee line, for AGF, for example, the line is revolving. This means that when I give a 10 million guarantee line for 5 years to Standard Bank, anytime they are using the guarantee and the customer are paying back, they can reuse the line. Okay, so most of the bank, when they use the guarantee for the one time, they think that it's finished. They forget that the guarantee is revolving. Okay, so I think there is that. And secondly, we have, now I'll come to the solutions. What are the solutions to improve the utilization rates of the guarantee? The solutions are simple. It is customer relationship management. The guarantor must have in his team relationship managers who are in contact on daily basis, if I may express myself like that, to explain the guarantee, to push the banker, to assist him, to ask him if his end user, his customer, need a capacity development. In brief, we have to incentivize the banker so that he will think and use our guarantee frequently. That's what I can say. Over to you.
Oh, thank you so much for that exchange. Liliane, was there anything that you maybe would like to learn from your bankers, your potential funders who are here today?
Thanks, Maddie. I will also go back to Frank and be a little bit selfish and bring it to the sector that is interesting to me, and ask you, how do these guarantees that you implement help businesses like ours achieve their commercial goals? And while achieving the commercial goals, how do they benefit the community around us?
Thank you, Leah. That's a very interesting question. First, depending on the size of your companies or the stage of growth in which the company is, the company will not access to finance if the banker didn't have guarantee. So first advantage, the guarantee is the catalyst that helps the SMEs to access to finance. Now, when the SME access to finance, I told you that we have our, first, it will help the SME to grow, to hire more people, to have working capital, or to have mid or long-term capital to invest, okay? So to be sustainable and to create new markets, okay? And with our capacity development assistance tool, we can even help the SME to train, to increase the competencies of its staff, okay? And we can help now the bank, okay? For example, if you are in a specific value chain, we can help the bank to put in place a special product, okay, that suits best the needs of the value chain in which you are. And specifically for you, Lilian, as I just said, African Guarantee Fund is managing the facility that help business, that help women business. So if with this facility, your coverage, will be up to 75%, means that when, on our business as usual, we cover 50%, it's a pari passu risk sharing, 50% with the bank. When it comes to women or green business, the guarantor will cover a higher rate, 75%. We give a discount to the bank on the pricing of the guarantee, means that also we give a discount to the SME on the price of the guarantee. And all this will also help the SME to access to more finance. So in short, three main advantage: the opportunity to access to finance, the opportunity to develop staff's competencies on sectoral knowledge, and the opportunity to grow the business, be sustainable, create jobs, and contribute to the poverty reduction in Africa. Thank you.
Thank you, Frank. Yeah. Mali, I wanted to say that this is such an interesting discussion, and there are several questions in the chat and online. But I wanted to say, Lilian, that let's say in particular, this Zambian facility that is being designed will be, the guarantee will be given to about 4 or 5 banks. And therefore, then the banks will be able to lend to you at better rates with all the coverage aspects Frank just talked about. And we hope that it will help at least 12,000 SMEs, of which the target would be 30% would be women. So hopefully access to finance would be enabled to great companies like yourself and others.
Thanks a lot, SIDA. Great to hear that.
Great. Thank you so much. I was just wondering, Ms. Sina, if maybe there was some specific technical information that you would want to know right now from either SIDA or the African Guarantee Fund, that some of our potential partners would also be interested in hearing right now on the platform.
Yeah. Well, thank you. So maybe I can direct the question to Eric. in the sense that while we are talking about this guarantee fund and we have other guarantee partners on the panel, what is the ambition or the aspiration that mute in to create more guarantee structures or larger scale guarantee structures for, let's say, the African continent? So perhaps, what could be the vision or the technicality behind what would enable more guarantee structures or larger guarantee structures? And the reason I asked that, and in response to, there's one question on how does guarantees help renewable energy? So one aspect of renewable energy is, when there is a project, we worked on a project that we gave a guarantee against the offtake, and that brought in a 9 million guarantee, brought in 15 million of private sector investment. So that's one aspect of how a guarantee could help renewable energy. But Eric, over to you for some thoughts on this.
Well, thank you. 3 thoughts, I believe. First of all, Africa, climate financing, they're very high prioritized by Sweden and SIDA. All our embassies that implement development cooperation programs, there are about 15 in Africa, they share this priority. So we work through the embassies, we try to reach out, and we always try to use different forms of mobilizing additional capital instead of using the scarce ODA grant resources that we also have available. But we want to keep them for purposes where we can only use grants. So to those that listen to this, Swedish embassies is the entry point for discussing guarantees and other development cooperation interventions. Secondly, regarding renewable energy in particular, we are working with call-on proposals. We had an ad out during the autumn, which we are evaluating now. There was a massive interest, so many interesting proposals that came in from different intermediaries like banks and financial institutions that wanted to cooperate with us under guarantees. And I guess, or I hope that we will follow up with further such call-on proposals. And then thirdly, this gives me an opportunity to talk a little bit also about our partnership with AGF, African Guarantee Fund, because I think it's really interesting and a way for reaching out. We cooperate with AGF through a backstopping guarantee, which boosts AGF's capacity to in its turn issue guarantees. So we benefit from the capacity, the outreach, and the knowledge of AGF. I think that is a model that we could use also with partners like UNCDF, a backstopping guarantee, which would be a win-win. We would benefit from your knowledge, your organization to fight poverty, and you would benefit from the extra muscles that the guarantee from the Swedish government would give you. So those would 3 answers to your question. Thank you.
Thank you, Eric.
I would like, Mali?
Yeah, sure. Go ahead, Mr. Ajaba.
Yeah, thank you, Mali. I would like to make a comment on pretty equations. On the background document, we saw that according to IFC, the unmet credit need for formal SME in the developing country is about 4.5 trillion. Okay, so this means that scale up the guarantee schemes across, I would say, the whole Africa is a very interesting idea. And I guess that what you are doing in what you are doing currently with SIDA in Zambia is something that you will scale up. And I'm saying that because a fund like African Guarantee Fund We are like a generic fund, okay? We are covering the 54 countries of Africa with limited capital. So due also to the size of our capital, we define our risk appetite. This means that despite what all our efforts, okay, we will work by respecting our risk appetite. But local fund like the one we are designing in Zambia, okay, can be more focused on sectorial, can be sectorial fund or fund with a bigger risk appetite, okay, and this will help the global ecosystem to increase the access to finance for SMEs. Thank you. Over to you, Molly.
Thank you so much. We'd scheduled this conversation for an hour, but clearly that was not enough time. Unfortunately, there's so many questions that are coming through to the chat, and many of our panelists have been responding to those questions as we go along, which is great. And unfortunately, we are very close to the time that we had allocated for the webinar. But what we'll do, and what is our typical practice, is that we'll collate the questions and send them out as a response document to all who had registered or who have attended this session. So you will receive a response to your question, and there's obviously opportunity for you to follow up should there be anything that you would like to know more about, or if you'd like to speak to any of our panelists directly in their professional capacities. I'd like to now just switch back over to Ms. Sina. If there are any closing remarks that you would like to give at this time, we'd be happy to hear them before we close the session this afternoon.
Yes, Molly, thank you. Wanted to take a moment to thank all the panelists. And I really feel it's been such an innovative exchange of ideas today. I think this is part of this future of financing in this decade of action, 2020-2030, that the UN has nominated as the decade of action. We felt our colleagues at UNCDF who are working on this facility and all the partners here have shown a real commitment, demonstrated their capacity and their commitment on leveraging ODA to mobilize additional private and public capital for the LDCs and other countries. So looking forward, the guarantees will very much be part of UNCDF's forward-looking plan, and I'm sure all the partners here as well. And so we think that this is a very important instrument to make sure that it grows in the future, and we'll be looking for partnerships with ministries in the countries, with the DFIs, IFIs, and of course the private sector, and also with the European Commission on the guarantee work under the EFSD+. So my call to action today, a quick call to action would be, let's partner together to unlock capital for the MSMEs. So as Jurette said, that they can become sustainable pillars of economies and create livelihoods. And we sincerely believe, at least within the UN, UNCDF, we'll continue to focus on our capital mandate, to look at loans and guarantees, and to really invest in the MSMEs. With that, thank you so much to all the panelists and all the people listening in, and for all your questions. Very vibrant list of questions.
Yes.
Thank you.
So great. Thank you very much.
Thank you.
Bye.
Thank you very much.
Thanks, everyone.
Just a quick reminder that the recording will be shared, as mentioned earlier, with all those who attended here today. And if you are interested in following UNCDF's work, not just in Zambia, but around the world, please feel free to connect with us on social media at UNCDF or at UNCDF Digital. And you also have an opportunity to subscribe to our newsletter. So we look forward to engaging with you further. But just to thank all of our panelists for attending, and to thank all of our attendees for staying with us until the very end. We appreciate your time and attention. And at this point, I'll close the webinar. And yeah, I would just like to encourage you all to take care and stay safe.
Thank you.
Thank you.
Thank you. Bye-bye.